just right, so don't get any louder unless I need to wake you guys up. Thank you very much for attending our session today. We're pleased to have you here and hope that there are things you can take away from this that will benefit you as you go forward. I'm June Henderson with SSI Consulting. Jeff Vonasek is co-presenting with me today.
Good afternoon.
Welcome to Jeff. And as I said, we're glad to be presenting to you and hope that there's something you can take away from it. Jeff is going to be showing you a lot of information regarding setting up allocation methods. So before Jeff gets started, it's my chance to talk to you a little bit about me. So I want to tell you a little bit about my experience, how I became familiar with the Allocator, and I guess part of the reason we were asked to present here today. First of all, I'm a CPA, except that I hate math. I can't do math in my head. I didn't start out in my career path to be a CPA, and I just kind of wound up there through a process. I worked in several different construction companies, first as just a cost accountant, and then later became an assistant project manager and contracts management, subcontract management. And it was at that point in my life I thought, you know, I like this accounting thing. I think I'll go back to school. So I did go back to school, became a CPA, went to work in a pretty large practice, and then that practice opened up a technology center back in 1999-2000, and guess what product that company decided to sell? It was known as Solomon in those days. The first thing they did was send me to Texas to do a 2-week boot camp to teach me how to implement the system. And so I came away from there with just a little bit of knowledge that I really needed a lot of work on. So I've seen the product progress, I've seen new version after new version, and being from the construction industry, I can see a real value in what this product brings to you if you're in professional services, construction, because you no longer have to store those rate tables in a file folder in your desk and look them up every time you need to bill. When you're getting ready to do your financial reports or your bonding reports, you no longer have to calculate those burden rates and those fringe rates in an Excel spreadsheet and do journal entries to get them into your system. So there's real value in the product, and we want to bring you that value today. So with that, I'm going to let Jeff say a little bit, and then we'll get directly into our agenda.
Excellent. So we are going to go through an introduction to Allocator. I'm going to talk at a very high level what it is, what it does, how you use it, how you work it. Then we're very quickly going to get into a demonstration. So we're actually going to build an allocation method today. I believe that you learn best by actually doing. And so a note about the PowerPoint, there are many slides to this PowerPoint, many of which we will not go through today because I will be actually doing it in Dynamics SL today. But it's there for you to take back home so that you have a step-by-step guide of what we did today so that you can practice on your own system when you get back. We're going to set up an allocation method. We're going to set up some rate tables. We're going to do some processing of it to see what happens. We're going to talk about indirect rates, how they're calculated, how they're applied and used in reports. And then we're going to talk a little bit about some tips and tricks and what's new in the latest versions of Dynamics SL.
Okay. One thing we want to leave you today, and part of our goal, is to give you some value that you can take away and to leave you at least one new idea. We'll be around the rest of the conference. If you've got some questions, catch us later. And also, we're going to take 2 short breaks during this session, and I want you people to be really ready to ask a question. The first 2 people to ask a question is going to get a prize. So we're trying to liven it up a little bit and get you to interact.
That's right. I understand they're really good prizes, too.
Well, I think so. It's a surprise.
Yes. You have to ask first.
Okay.
Okay, so let's start with an introduction to Allocator. What does the Allocator do? In a basic sense, it creates transactions, both in projects and in your general ledger. And that's optional, by the way. What type of transactions does it create? It can create invoice transactions for the billings module in Allocator. It can be used to apply indirect costs, things like fringe, overhead, and G&A. It can be used to calculate things like a fee, a provisional fee, or an award fee. And then finally, it can be used to move costs around in your projects if you're carrying a WIP, or a work in process, or an unbilled receivables. Allocator can do that for you. Thank you. There are many setup steps in Allocator. When you get to know this module, you will spend more time setting it up than actually running it. And in fact, we're going to talk a little bit about running it in automatic mode. But we're going to go through some of the key portions of it today. The first setup step is a key definition. This is where you define how Allocator is going to act when it sees a transaction in project. Is it going to act based upon the employee ID, or based upon the labor class used, or based upon the project? The second is we're going to set up rate tables that then allow us to put in rates based upon those keys. And then when we set up those rate tables, there's a screen where we do data entry in where we put in our rates called the multi-level rate entry. We'll do that. We'll then dig into the allocations itself. We're going to build one very quickly. We're going to build a time materials allocation method, which is going to apply some fringe, overhead, G&A, and then generate some revenue for us. The allocation methods themselves are the formula that Allocator uses to process data that's flowing into your project's system. And then finally, we're going to touch on the allocation group maintenance. This is where you define your indirect rate cost pools and the basis. So the system will tell you and calculate on a monthly basis what your overhead rate is, what your fringe rate is, both on a year-to-date and a month-to-date basis. The allocation processor is the engine that takes that design that you built in the allocation method and runs it against your projects. So we'll go through ways that you run that and some best practices. And then finally, we'll run the indirect rate calculator so you can see in our system how it's calculating an overhead, a fringe rate, and so on and so forth. So without further ado, let's go ahead and build an allocation method. So a couple key things. This is going to be a T&M allocation method, which is one of the simplest ones. Bill rates are going to be derived by labor class and project. Labor class meaning the type of work a person is doing. Are they being a system engineer? Are they being a project manager? So on and so forth. We'll have some special bill rates for special projects. So we have a customer who's negotiated a very large contract and a discounted rate. So we need to put those in. That'll override our standard rates. And then finally, we're going to apply some indirect costs, fringe, overhead, and G&A. So I'm going to switch over to our demonstration system. Very good. And I'm going to go ahead and pull up our allocation method. Okay, every allocation method has an ID that is configurable by you. Use something that makes a lot of sense to you. So this is my time materials allocation method. This is number 3 because I've done a lot of preparation for this presentation. I've got a 1 and 2, and you might get a chance to see those in the future. And then you get a chance to describe it by giving it a description or name. Let's move to our first step. Now, if I open up this screen, the allocation steps themselves are broken into 2 different parts. The first part is, what do I gather? What do I get from my projects to do some sort of action? And that's what we're going to define here in this first section. To the right, which is the second section, describes, once I've gathered that, what do I do with it? Do I apply a rate? Do I push it back to the project? Do I push it to the general ledger? Do I push it both ways? And so I think of it and I use it in 2 different steps. What am I going to gather to process? And then once I process it, where do I put it? So the first thing we're going to do is apply a fringe rate. And to apply the fringe rate, we're going to gather all our direct labor cost. I land on this field called the calculate type. Now there are 4 calculate types. There's a calculate and hold, which means gather an amount and hold it. There's a calculate and post, which means gather an amount, do something to it, and then post it. And then there's a subtotal and hold and a subtotal and post. And subtotal refers to lines above the line that you're at, or previous lines. So if I do a calculate and hold, I might want to go grab that when I do a subtotal. In this case, I'm going to do a calculate and hold. I'm going to gather my direct labor through my direct labor. And you'll note that we have a range of account categories that we can use here. Later in the step, we're going to talk about some best practices, but if you've structured your account categories in such a way that ranges work well for you, meaning all your labor starts with the word labor, you can start with labor direct and end up with labor G&A if you want to. It works much better for you, meaning that you can take one step to gather many different account categories. We'll make this simple and only take our direct labor. So, and in this case, I'm going to gather the amount of the labor. And that's because my fringe is applied to my labor cost. So I have a fringe rate that's been calculated as a percentage of my direct labor cost. And so I want to take any direct labor that goes to this project, apply that fringe rate, and post it as a fringe cost back to my project. The rest of the fields we're not going to fill out now, except for one field at the very end, which is allocate non-billable yes or no. Because fringe is applied to all labor, whether it's billable labor or not labor, I answer yes, I do want to allocate non-billable here. Now, there will be instances in the future where I will say, no, I don't want to allocate, for example, a revenue on a non-billable transaction. So step number 20 is going to post fringe benefit on direct labor. In this case, I'm going to do a subtotal and post. And notice I don't put it in a begin-end account category. Instead, I use my steps, indicating that I'm gathering it from step 10, where I gathered that labor. And I identify a rate type. So this is the beginning of the rate table. We're going to dig into this a little bit deeper. But for purposes of this, I've created a rate table where I'm storing my fringe benefit rates. And I'm going to choose it from our list right here. And now I get to the section where I define where I'm going to post that. Now I am going to I'm going to use a masking here called SSS, which stands for source. In this case, I'm saying that wherever the source labor transaction that's generating this fringe, wherever that came from, that's where I want my labor cost to go back to. There's a bunch of masking, which we're going to get into later, but quite often that's what we want to do. We want our fringe to follow the project that the labor got posted to, and that's why I'm choosing SSS here. And then I choose an account category to post it to, which in this case is going to be fringe benefit. And finally, I get to this section here where I determine what level of detail do I want to post it in. My requirement here is that for every labor charge that goes to a project, I want an offsetting fringe charge for it. And that's why I chose detail. But if I didn't want detail, I could summarize by employee, so I could get that fringe benefit charge for every employee. I could also summarize by sub-account if I wanted to. And then finally, the unit post indicates whether the unit that drove the fringe, meaning the hour that the person charged to the project, is also going to be associated with the fringe benefit charge. And I'm going to go ahead and say yes to that. So I'm going to see 1 hour in and then 1 fringe benefit hour. And that finishes off our fringe allocation. Now I'm going to step back here to an allocation that I've already set up that looks very similar to the one we were just working on, but it's got a couple of other pieces to it.
Okay. As Jeff said, this one is already set up. So again, we're going to have a begin and end step on line 20 and gather that information. We will specify our rate type. And in this case, we can use a rate type with a table behind it that we're going to go into next, or we can enter an amount, an allocation percentage amount on this line.
That's right.
Again, we're going to choose the post project and task and move through that process of wildcarding it.
Oh.
And the account category.
I just realized the PowerPoint is not being displayed.
No.
So, sorry about that.
You were there.
All right.
We're on G&A.
That's right. So we're on overhead and G&A. So what I'm doing with overhead is I'm doing something very similar to what I did with fringe, in that I'm going to gather my direct labor to apply an overhead rate to it. But in addition to gathering direct labor, I also want to gather the fringe that I calculated on step number 20 and make that part of my overhead allocation as well. So what line 100 is doing is it's gathering the direct labor, just as line 110 did, and line 10 did. And what line 110 is doing is it is accumulating the fringe that was calculated on line 20. Notice that this is the first place I'm doing a subtotal and hold, and I'm indicating line 20 through line 20. That's an important facet of allocations in that it can take calculations that were made in previous steps and make them part of future steps. And then finally, I apply the overhead using an overhead rate table that I've set up, and it is taking the totals of lines 110 through 120, meaning take the fringe, take the labor, take the fringe on that labor, and then go ahead and apply an overhead rate against it. And then finally, my G&A allocation does something very similar as well. Gathers all the direct labor, gathers all the fringe on the direct labor, gathers all the overhead on the direct labor, adds to it other direct costs, because typically we only apply G&A to other direct costs. We wouldn't apply an overhead to other direct costs. And then sums all those up. Notice this is subtotal and post, taking lines 300 through 330, fringe, I want to start with fringe, and I don't know why. The direct labor, the fringe on the direct labor, the overhead calculated on that, and then the other direct costs, and then go ahead and apply a G&A to that. And again, for both the overhead and the G&A, notice I'm posting back to the source project, and I'm using a specific account category for overhead called OH, and a specific account category called G&A for the G&A allocations.
Okay, it's time for those questions. Who's first? You, sir.
So, there's an account associated with those account categories, but it's got to be the fringe account or overhead account set up.
That's correct.
And only one?
Multiple GL accounts can be attached to a single account category, but only a single account category can attach to a GL account. So you have a list of GL accounts that you consider other direct cost, but they'll all be labeled ODC, so they're easy to gather in the calculation. All right, you get.
That's correct.
Okay, we've got one prize to give away.
Another question. They want to see what the prize is first.
That's your racing hat.
Thank you.
We didn't give you a notebook or anything like that. Thank you. Okay, next question. Somebody.
Couldn't be easier.
Rob asked me a question.
You have to, just kind of a more general question.
Fine.
You don't have to use payroll, Solomon payroll to run project, right?
Absolutely not.
Correct.
Absolutely not. There's methods of getting the payroll or the labor data in there. It can be as simple as entering a project charge entry or an entry through your G&L.
Right.
Okay, you get a prize.
Or you can use the SL time and expense entry system, which will also get those labor charges in there.
We'll have you a Bluetooth keyboard. Ooh.
Hey, look at that.
I'll ask, I don't have two prizes for this session, but and we got two more prizes coming up. So what's your question? Mm-hmm. It could be what we're going to cover next in the indirect labor or the indirect
Rate
cost
calculation,
pool,
right.
the rate table. So it could be what we're going to cover. So save that, and you can ask it in the next session and get a prize. Okay.
Excellent. Okay.
All right, we're going to talk about the billing rate table now. And are you going to switch to PowerPoint, Jeff?
No, I'm going to go
Okay.
ahead and set up, thank
Good.
you, but I'm going to go
You're
ahead and set
welcome.
up the allocation. So now what we're going to do is we're going to apply revenue to this project, and we're going to use a rate table and then dig into the rate table a little bit further to see how it's set up and how that is applied. So we'll start with line 400, which I'm going to record revenue on labor. And this is all done in one step, so I can go ahead and do a calculate and post. And again, I'm going to choose my direct labor, through my direct labor. And I come to my rate table here, and I'm going to choose a rate table I set up called my labor billing rate. And the basis that I'm going to use, instead of the labor cost, is the labor units. And the reason why I'm choosing units here is because I want to take the hour that someone is charged to this project and multiply it by whatever the hourly rate is to determine what I'm going to bill the customer and what the revenue is going to be. So let's talk a little bit about how I set up these rate tables and how it computes what a billing rate is. So I'm going to go back to the Allocations module, and I'm going to go into this screen called the Multi-Level Rate Entry screen. And I've created a standard rate table for everything that I do. You can have more than one rate table if you want to, but it's best practice to try to minimize the number of rate tables that you have, because if you have any changes that are global, you'll end up going back to every one of the rate tables and need to make changes. And so you see in this rate table, you see some of those drivers that I was using before. There's the fringe benefit that I was using before, the fringe benefit rate, the overhead rate, and then here's my labor billing rate. Now the way that these tables work is they have a default rate, which is the very last option. If it can't find any other rate, it's going to use what the default rate is. And then you have what I like to think of as exception rates, which are levels 1 through level 9. Don't need to use all of them, but you can have up to 9 different exception rates. And when the allocation processor runs, it goes to the rate table to try to find a match, and it starts with level 1. If it can find a match, it uses it. If it doesn't, it goes to level 2. If it can find a match, it uses it. It just keeps on passing through until it can make a match. So you'll note at the very bottom of my rate table, I set up specific rates for a labor class. And for purposes of this demonstration, I set my labor classes up to match my GL counts. Didn't need to be that way. Often people don't do it that way. It's just the way I set it up. But you see that a 5,000 is an analyst. And so I'm saying that an analyst generally charges $100 an hour at my organizations. This is what I think of as my standard rates. And if I have no exception rates for a project, then it will always fall back to these standard rates because I'll be able to find it there. But you see at level 5, I've set in some exception rates for a specific project. See that project starting with a C? And a labor class. And so this is the scenario where this contract was sold for whatever reason with a different rate for analyst and a different rate for, let's see, director as well. And there's lots of business reasons why that happens. I'm sure you know better than I do. But in this case, if this project is used and that labor class is used when time is entered, it'll match this and use this rate as opposed to using our standard rates. So how did we set up these exceptions? And these are the keys that I talked about before, what drives rates. And we do that in this screen here called the rate table definition. And so there's that standard rate table that we were looking at. And there is my labor billing rate. And so you see at level 5, I put in a rate key of project and labor class. And again, these are all lookup keys that you can fill in. You can define your own keys as well, but the ones that are there by default are employee, sub-account, project, task, just about everything you need is there. Every now and then we might need to add a special key. There's a place to build those. And you notice that I put in my project labor class rate at level 5 and my labor class rate at level 9. Because for me, a best practice is to build some space between those two. If my business process changed where I need to have another element that would trump the labor class itself, but would not trump a special rate I put by project and labor class, then I've got some space in there to build it. And typically I do that. I try to leave something above and below all the labor classes that I set. And so that's how the allocator looks up the labor class and finds what a labor billing rate is based upon that information that I put into those labor rate tables. Okay, so let's continue on with the rest of this. The next thing I'm going to do again is post that revenue back to the source project. And this time, I'm going to call it an account category called revenue. And my offset projects are going to be, again, SSS, meaning the post project again is SSS, and the offset project is also the source project as well. And I'm going to use an offset account category called unbilled AR. Now I'm doing that because the billing module needs to have a trigger account category to decide what gets billed and what doesn't get billed. And in this case, I'm using something called unbilled AR. So I'm generating revenue to the project with an offset to unbilled AR. And its subsequent steps, I'm going to load unbilled AR into the billing module and bill it, turning it into billed AR. So we're leaving unbilled AR. So it's just a holding place for that to go until I'm ready to go ahead and turn around and bill it. And now I'm ready to do something to my general ledger. All the steps above, the fringe, the overhead, and G&A, I applied at the project level, but I did not post those to the general ledger. Now I am ready to post the revenue to the general ledger because I want to try to match my revenues with my expenses. And in doing so, I choose the account category that's appropriate. So the debit account is going to be my unbilled AR account. And the sub-account, I'm going to choose SSSs here. And so this is a good point for us to talk a little bit about the masking and what each of the masking characters means. So the first code that we have here is S, which I described before as being the source transaction. That means that whatever transaction created this, in this case it was a labor charge, it came into SL with a project and a task and an employee and a labor class and a sub-account. And in this case, what I want to happen is I want the unbilled, that's the debit, the unbilled to go back to that same sub-account. Sometimes that makes sense, sometimes that doesn't. In fact, for many of my clients, the balance sheet accounts all live in the balance sheet sub-account, so that's why I'm going to define SSS there. But over here, where I post the revenue, which is my 4,000 account, that's where I'm going to put my SS. That's the first option that you have. The second is called, we'll do it this way, PPP, which says, go look at the project that somebody charged time to on this line item, because every project has a default sub-account. Those of you using Project Controller know you must fill out a default sub-account, and supplant that sub-account when you generate this revenue and post it to General Ledger. That's my second option. My third is T. Anybody know what that stands for? Stands for task, because I can select and override sub-account by each task. And that makes sense if I have tasks that lives in different departments of my organization, all in one project. And I want the revenue to go to the development department, not the implementation department, for example. My fourth final option is E, which stands for employee. That means look at the employee who charged time to this, that's generating this revenue, and drive the revenue back to that employee's home charge sub-account. In that case, it's not the project that drives where the revenue goes to, it's the employee that drives the revenue that goes to. And you can mix and match these if you choose to do so. Now, I always post my revenue in detail because I like to do a series of revenue reports by employee. But the allocate non-billable, I'm going to set that to no here. And the reason why is I allow my employees to decide whether they can bill for an item or not. It's their judgment call whether this is a billable item or not.
We can.
That's right. That's right. And in this case, if an employee chooses in their time entry to say this is non-billable, I don't want it to generate revenue because I do not intend to bill this for a client. I want the cost to come in, which it does. I want it to apply fringe and overhead and G&A. But I don't want it to generate revenue because I'm not going to bill this particular line item. And so that finishes off our time and materials allocation.
Okay, we're going to talk about now how to set up a project and define an allocation method. You want to open up a project screen, Jeff? And you'll see that, if I can get my pointer to work. On the project, this one in, you have the ability now to have two different allocations methods. This is something new in SL 2011. Previously, there was only one. And it's really helpful if you like to build an allocation method for your revenue and then a separate allocation for your cost. And you can also generate those separately. So you assign the allocation method, and behind that allocation method lives all your rate tables that relate to the project and the employees that work on that project. The allocation processor is the next key to getting those allocations out into your project transactions. And it can be run in several modes. You will see that it defaults into preliminary mode, which allows you to select variables. You can run an allocation by sub-account. You can run it by a particular allocation method or a single project. You also have the ability to select your transaction cutoff dates and the periods you want these allocations to post to. So you've got filters. You can also choose to run allocation method number 1 or both. So you've got a lot of variables here in how you can process that. In preliminary mode, the processor will look through all of your unallocated transactions that have not been flagged and will actually generate a report that you can review. It's an allocation audit report. So it allows you to see what transactions have been picked up, what rate tables have been applied to those transactions, and where they're going to go. So after you've run it in preliminary mode, you've verified that everything on your report looks the way you want it to, then you can switch to final. And when you run it in final mode, it does create a GL batch if you have the GL information indicated in your setup, and that GL allocation batch will be available for posting over in your GL.
So just another note about the ways that you can run Allocator. You can run it in what I think of as regular mode or normal mode. Essentially, it's an on-demand mode, which is what we're going to do here in a moment. That means every time you run it, it'll go ahead and process transactions it finds that it needs to process. There's a secondary mode called batch selection, which allows you to do it by batch. Typically, this is not used except during the implementation phase, where we're trying to very selectively control allocations so that we can make sure that they're configured correctly and posting to the correct way. And then typically, once we're satisfied with that, we then switch Allocator into automatic mode, which means that anytime a transaction posts to a project, Allocator will wake up automatically and go and do its thing. And for most folks, once you're implemented and up and running, you'll put it in automatic mode, and just as June said, it just happens automatically. You don't need to do what we need to do.
For example, if you release a time and materials or a time report batch, it's going to grab that information and run it through that allocation processor at the same time the batch is released in Project Controller.
Exactly, and you didn't have to find that rate table in your desk drawer, and as soon as that labor cost got posted to the project, the revenue got posted to it as well, so I'm matching my revenues and expenses. Mm-hmm. So we'll go ahead and do a preliminary, and we'll do it for our project. And we'll do it for period 3.
And pretend you didn't see that warning pop up.
What did that say? And this is going to bring to reality all the steps that we did in the configuration of the allocation method. So here's the first report that June described. And so you see the first set of activities are going to AR Unbilled. I think it comes out alphabetically. I'm not quite sure. I have to think about that. But I think it comes out alphabetically. So AR Unbilled is going to show first, and revenue is going to be the very end of this list. But remember that AR Unbilled is setting up the transaction so I can go ahead and turn it into my billing. If I go to my next slide, here's the fringe benefit. See the FB? Using whatever rate we set and applying that fringe benefit cost to the project. And I go a little bit further, I should see my G&A being applied at that rate and the overhead. You'll note that every transaction that posts to the project triggers an allocation. You remember I chose that full detail option because I wanted to see every single one of them? This is where it shows up. It also shows up when you post to the general ledger that way. When we close the part that posts to my project, that was all about what get posted to Project Controller. Now I'm going to get to see what get posted to the general ledger. You remember I didn't post the fringe or the overhead and G&A. I did post the revenue though. So what I should see on this is a series of revenue accounts, that 4,000 account, with the offset to the 1120. So there's the 1120 right there. And there's the amount. And oops, all on one page. And there is the 4,000 accounts with a negative amount. I will note that this is one of the only places in SL that I'm aware of that a negative amount really means a credit amount. I know many other systems do that. When you see a positive, it's a debit, and when it's a negative, it's a credit. For the most part, SL is very intelligent about that, so it's not going to represent it that way. But in this screen, negatives are credits and positives are debits.
Okay. So let's talk just a bit about recalculation and it, why you would do that. Let's say that you've ran a final calculation against a project and one of your rates was wrong. The transactions have already been flagged as allocated, so they're not going to get picked up again in a regular allocation. So you've got to choose recalc, yes or no, and then you there have the ability to choose your cutoff date for the transaction, again, your period to post, and then you have some ranges here for your recalculation. And what the system will do is it will actually look at what your original allocation amounts were. It will reverse those out, and it will create a new allocation with your new rates or new information that you've changed. And it will go through the same posting process as the previous one. So you'll have a reversal and a new amount.
Often this is used to apply maybe a fringe or an overhead at an actual rate when you get to the end of the year. That maybe you started with a provisional rate and you applied that throughout the year, and at the end of the year you want to recalc and apply your fringe, overhead, and G&A at what your actual rates are year to date. Question? Yep.
Yes. Well,
okay, did everybody hear that question? Do I need to repeat it? No, everybody hear it? Okay. So the answer is yes. If I apply a different rate table to a project and I do a recalculation, it'll say, hey, there's a big difference here. There's a lot of things that are different. It'll back out all the entries that happened through whatever period you choose there. So if you choose from the beginning of the project, it'll take a look at everything that happened since the beginning of the project, back those out, and put those in. Now, the things that back out, like if it was a revenue transaction, will create a negative revenue transaction. And then it'll put in a positive revenue transaction at whatever the proper rate is or what the new rate is. Both of those will flow through to the flexible billings module. So essentially, in flexible billings, you'll see a negative revenue and a positive revenue. Now, they can be handled one of two ways. If they net to a discount, and you've discussed with the client that you're just going to give them a discount, you can process that as a credit memo and just push it right on through. But there's a feature in flexible billings, which is a little out of scope for here, that allows you to reverse an invoice that's already been created, and it creates a credit memo that completely reverses out the invoice that you posted, and it creates it sets up a new invoice with all the items in it that got invoiced originally. To that, you can then add all these transactions that back out all the bad stuff and put in all the new stuff, and now I got an invoice with the right amount the way it should have been the first time.
So this actually doesn't take care of the invoice you're saying?
not if it's already created. If it's already been created, no, you would need to reverse it. But if it has not been created, absolutely, it's going to summarize all the unbilled.
If I haven't finalized that invoice, I recognize before I finalize it, this was the correct invoice, if I finalized it, you got it.
Then you need to reverse it. That's correct.
Okay, get a price.
Yeah. There's a printing. So in flexible billings, there's an option that prints an invoice. Once you printed it, it's committed. That's exactly right.
But it's easy to reverse.
Why doesn't that say print and post? It should
There
say
you
print
go.
and post, right?
Yes, ma'am. It's hard to say this time of day, isn't it?
Try it again.
Rate of 1111. And then we did the allocation, it posted, noticed it was wrong. So the person would go back in here and modify that rate without changing the effective date. When it reverses, is it going to reverse that new rate that they entered, or is it actually going to look at that original transaction of 1111?
Can I take that one?
Yes.
Did everybody hear that question? It's a very good question. So one of the things that I realized I perused over is when you put in rates, there's effective dates associated with those rates. An allocator is smart enough to look at the transaction, look at that labor transaction, and say, what's the date of that transaction, and then look down that table to figure out what rate it should be used. Ostensibly, you might want to post new rates. I'm going to change my rates at the beginning of June. I can enter them in today and be assured to continue to bill my old rate until I get to June 1st. And from June 1st forward, it would use the new rate. So the question was, if I determine that the rate was wrong, do I go back and update the rate with that same effective date? And the answer is yes to that question. And if I do that, when it creates the back out transaction, is it going to look to the rate table to back out what it finds now to be the new rate? Or is it going to look to the original transaction to figure out what was used then? And the answer is it looks to the original transaction. So it reverses the original transaction, and then it calculates the new rate using the rate table as it exists today and posts it. And then so you'll end up with an out of what went in way ago, and then way ago, long time ago, or previously, and then an in of what the rates show today. Very good question. Question?
Our prize. Our last prize.
Yes.
We're actually still in 2007.
Okay.
We have a client that insists that we're billing at the standard rates, and then they want to
You're welcome.
Discount later.
Yeah, in other words, we have to rebill it at a reduced rate later. So I was wondering about the switching out of the dates. Does that work at 2007 also? Because I thought we were trying to figure out, okay, if we put it in on the January 31st for effective 2/1, and then the second time we do 2/1 because I thought it had to be more recent time. But it does work in that version as well.
Yes. So the recalculation feature has worked for a number of years. I'm not sure how far back, but at least back to version 7, and I at least back to version 7, yes.
No, the recalc.
When you do a recalc, it
And uses the new rate. Yes.
that's right. It does make a new set of transactions. So, and because SL is a double entry accounting system, it doesn't change what is there. It backs it out and creates a new one. So you'll see the original transaction in at the wrong amount. You'll see it being backed out, and then you'll see the new one in at the right amount. The first two net to zero, right? But that's what you'll see.
No. It pulls it out the way it went in. Yeah.
That's right. That's right. There is one caveat. I just want to be clear about that. Let's say you do recalculation and you don't really change anything. It will look at the old, look at the new, and say, there's no difference here. I calculate the same thing. And so it finds no need to do a transaction in that case, so it won't change anything. So if it's a rate for just one labor class that was wrong, it doesn't back out all the labor classes and put them all back in at the right. It just fixes the one that's wrong, or was wrong, or changed. Question?
I have a question on labor class and the levels that you were talking about, because we run into a lot of problems where there's a data entry error, someone's entered the wrong labor class, and we're allowed to post that time, but then we go to the allocator and can't find that labor class to match the rate table.
Yes.
And so we'll get it all, at the top of the audit report, upon the rejection. And
Rate not found.
and switch the labor class to the correct labor class, because you can't do that as a project transaction transfer, right? You can't. Okay, so I'll just finish my question.
You can't change the labor class. That's correct.
Okay, so now it has the wrong labor class and the right labor class. But I still have to go to the rate table and add the incorrect
So we'll take that one offline, but I'll answer it at a basic level. In the rate table, the first thing that is defined is what's called the default rate. And so if it can't match a labor class for a project, it's going to run home to the default rate. Now you can set it up that there is no default rate. And if that happens, what happens when you run Allocator is it's going to error and say, I couldn't find a rate at all. If you set a default rate of $0, it'll find something to do. Take that with a measure of caution, though, because if you're not watching your rates quickly, you'll find a bunch of transactions on invoice at $0, and you're scratching your head as to why. So often people will remove that so it kicks out in the allocator, and they know, hey, I got to fix the rate first before I do it. The point that she was making is once the labor class has been charged to the project, it's there, whether you like it or not. You can back it out and put another one in, but the back out and the original transaction stay there. And Allocator's got to find a rate for that. So she ends up putting in a $0 rate, I guess, for that project. And that is, yes, that's a requirement.
Okay. We're going to talk about the indirect rate calculator now. This is used widely by government contractors who have to report and adjust their contracts every year by their actuals. And Jeff is actually going to take you through this setup real quickly. And then we're going to move into some tips and tricks. We've just been flashed our 15-minute warning.
Excellent.
So we need to get through the rest of it. And again, everything is in the PowerPoints for you to download. So you're seeing the live screen on the big screen, but you'll have everything and to enable you to go through this and set up when you walk away from here today.
Thank
Jeff?
you, Sue. So I've gone ahead and run the indirect rate calculator for period 2. So the indirect rate calculator is there designed to help us determine what our fringe rates are, what our overhead rates are, any of the rates, any of the overhead costs that we want to apply. It pulls this information from general ledger. So often people get a little confused because you run the indirect rate calculator out of the allocation module, but its setup is all in general ledger because that's where your cost pools are, right? That's where you're posting your fringe costs to and so on and so forth. So let me open this up just a little bit here so you can see a little bit better. The report itself, I think, is quite elegant. The top part determines what the cost pool is. So in this case, I have I'm calculating a fringe benefit period to date, right? And see all my accounts? I've structured my chart of accounts that my 6,000s are my fringe costs. So see how it's gathering all my fringe costs for period 2. Now down at the bottom here, these are the basis accounts that are used to calculate the percentage, meaning I'm going to apply fringe to bid and proposal labor, direct labor, G&A labor. I'm going to apply it to all labor, right? And so I'm using 8,000 accounts and 7,000 accounts and 5,000 accounts where my direct labor is. And you'll notice that it takes the top, the source, the 99,000, and divides it by the 488 to come up with what my fringe rate is, which in this case is 20.46 for this particular month. Now this is a month-to-date rate, and I calculate mine on a year-to-date basis as well. There you go. Here's my fringe benefit on year-to-date, which you see up here, which is a little different. Notice that it's 18.26. That's because for my business purpose, year-to-date is what's really important to me, but I'm trying to manage that every month. I want to see how my fringes are going up and down and left and right. So how did I configure this? Well, here's the confusing part. I configured it in general ledger. And so I'll go to my financials, and I'll go to general ledger, and I'll go to this allocation group maintenance. And lo and behold, there's that FB we just looked at, and I think we started with the FB PTD right there. That's the one we looked at in great detail. And so this is where I defined the 6,000 accounts being my source pool. Notice that I'm using masking here, so I can use question marks. I don't have to define every GL account that starts with a 6. And then down at the bottom, I'm identifying here, we'll expand this out, what the basis accounts are. There's that labor, that was what? That was my bid and proposal labor. And there's the direct labor that you saw in that report as well. Now, one interesting step here is notice that the account I'm pushing to is a fictitious account. In this case, I'm calling it FBBP, which stands for Fringe Benefit on Bid and Proposal Labor. It's not a real GL account. The reason why I do that is because indirect rates often need to rely upon calculations made earlier. Do you remember when we did the allocation of overhead? We had to get the fringe that got posted to the labor and gather both the labor and the fringe on the labor to apply my overhead. Same thing is happening here. So in subsequent allocations, here's my overhead allocation. You'll note part of my source pool includes these accounts that got generated in the previous step of the indirect rate allocation. How does it know how to do that? There's a sequence number associated with every one of these. And it starts with the lowest sequence number, does that one first, finds the next sequence number, does that one, and so on and so forth. So if your sequence is structured right, that it applies the fringe first, then you can associate the fringe in a future step. In this case, it is the overhead step. Once these rates are calculated, they then light up a new feature in SL, new for a couple years, I should say, under Project Controller, called the Government Contracting Reports. So this is for anybody who's in the government contracting business, this is probably a pretty familiar report. It's called the JSR, Job Summary Report. And what it does is it looks at a project and allows you to see your fringes at either your target rate, meaning those rates we put in the allocation multi-level rate entries, or your actual rate. And that actual rate was calculated when we did the indirect rate calculation. And for many folks, this is a critical need because they need to compare the difference. If I'm using a fringe rate that's too high or too low, if I'm using a government contract, I'm going to have to adjust that before the end of the year. The government's going to require me to do that. I get audited on that, right? For other organizations, they can use it to see how accurate their fringe is and whether they need to do adjustments. So when I run this at the actual rate, we should see in this report that it has applied the actual rate which we calculated in the indirect rate calculator. We'll close it, and there it is, my fringe rate at 18.27%. Everybody remember that? I get that right? Sometimes I use the month-to-date rate, and I always get it wrong. In addition to this report, there's a whole series of reports that work on these two sets of rates. And probably the most commonly used one is the indirect rate cost analysis, which will show the project at the provisional rate or the target rate versus the project at actual rate and what's the difference between the two. Am I over or under allocated?
Okay, Jeff, we have 6 minutes.
Okay, I think I'm through this slide.
Okay.
And we're on tips and tricks.
We're going back to the PowerPoint now.
Very good.
Jeff's taken you through how the system looks at the account categories to gather and summarize or calculate various rates using this setup. So as you're structuring your company setup and your account categories, if you will group them, ODC, other direct cost airfare, lodging, and as he explained, labor, regular, labor, overhead, so that when you're in that allocation setup method and you're choosing your account category range, it's easy to pick the first and an ending one to get them all on one line. Also, you can create a single indirect cost allocation method and assign it to method 1 on your projects, on all of your projects, so you get consistent cost allocation across your company. And this is one that we use occasionally that a lot of people are not aware of. It's called a zero allocation. And I've had people who have taken the allocation method off of a project and tried to run Allocator to remove those previous postings. That does not work. You need to set up an allocation method called zero, or whatever, undo would be a good word. And then within the line items, you have nothing. It's just a blank allocation method, header, line items, and if you assign that to a project and recalculate, it will back out everything that's ever been allocated to that project since its inception. Or you can choose a transaction date range there. So if you need to undo everything, assign a new allocation method to the project and start over, this allows you to do that. Jeff, you want to talk about multiple cost pools quickly?
Sure. So we're going to touch on some of the new features
5 minutes.
with Feature Pack 1 and Service Pack 2. In the past, the reports that I showed, the job summary report and the indirect rate cost analysis report, could only deal with one fringe pool, one overhead pool, one G&A pool. With this release, we have the ability to have unlimited pools. So you can set up multiple overhead pools if you've got an office in LA and an office in DC and have different overhead rates that you need to apply. You set up those multiple cost pools and label them appropriately. And on the allocation, that's okay. On the allocation method line itself, you associate what those cost pools are. Next slide, please. Great. One more slide, please. There is a new feature in SL's Feature Pack 1 or Service Pack 2 for 2011 that allows you to go back and recalculate all of your postings from a year-to-date perspective. This is often done in that scenario I described at the end of the year. You decide that my fringe rate was wrong and it needed to be this rate, and my overhead should have been this, and my G&A should have been this. And what this feature will do is in one step go back and apply these new rates to every project and clean it up for you. So it's a recalculation, but it's kind of a recalculation, simple, easy, straightforward. Makes it one step.
Okay. We need your feedback. Oh, quick.
It can. So if you have a cost-plus project, in which you're billing for both your fringe, the labor cost plus fringe and overhead and G&A, it may create new fringe, overhead, and G&A transactions that will flow through to flex billing. So the answer is yeah. Time materials, it wouldn't, right? Because I have a standard bill rate that I'm using either way. So it depends on the contract type. Question?
Just real quick on that too, will it do that to closed projects as well? Like as far as percent complete, will that recalculate your percent complete as well if you like?
The question is, will it change your percent complete? Will the recalculation change your percent complete? If your percent complete is based on revenue, and your recalculation is using a different revenue rate, like in a cost-plus project, it could change your percent complete. That's correct. Often people will choose percent complete calculations based upon expenses, and usually it's either labor or it's all expenses. So if you analyze percent complete on both direct labor and fringe on direct labor and overhead and direct labor, and those rates get changed, then yes, they will change your percent complete. No. So the question is it actually posting costs to the project when you do this the year-end close feature, right?
No, just figure out
When
when you're using the allocator.
I'm using Allocator. Is it posting to projects? The answer is yes, it is posting to the projects. And it can also post to the general ledger if you configure it as such. So what I demonstrated today was the fringe and the overhead and the G&A posted only to the projects, but not to the general ledger. But the revenue did post to the projects as well as the general ledger. So recalculations, allocations, and that year-end close are all posting transactions to the to project controller, and the allocation method will then determine if it also posts to the general ledger.
Okay, see us after the session. If you have any more questions, Jeff and I'll be around today and all of tomorrow and part of Friday morning. And we'd love to talk with you more. Now, be sure to do your evaluations. Give us feedback, how we can improve on our presentation, what you'd like to see us do with the products, and If you need any help with Allocator, go out to the website, download the PowerPoint, and you should be able to work through it all on your own with no help whatsoever.
Thank you very much.
Thanks, everybody.